Hello everyone and welcome back. In this video I want to share an update on the latest phase of my live trading. Over the last period I made an important structural change to the portfolio. First, I unified the exposure across the portfolio. Then I filtered the system further and reduced it to just one strategy per sector. Right now, my live portfolio is built around four core markets: XAUSD, US30, Brent and EURJPY. The goal of this change was simple: create a cleaner portfolio, reduce overlap, and make the overall performance easier to evaluate in real live conditions. The filtered live portfolio currently shows solid long-term stability with a total return of 31.6%. The monthly return is 2.3%, weekly return 0.5%, and peak drawdown remains limited to 6.3%. The profit factor stands at 1.61, with a win rate of 48.6%. In terms of trade distribution, gold is still the largest component, accounting for 44.6% of all trades. EURJPY follows with 21.6%, US30 with 18.2%, and Brent with 15.5%. So, even though gold remains the dominant market, the portfolio is now much better diversified than before. That makes the live results more balanced and gives a more realistic picture of how the strategy set behaves across sectors. One important technical aspect of this project is contract rolling. When trading futures, contracts expire, so positions cannot stay on the same contract forever. Before expiration, trading has to be shifted from the old contract into the next active one. This process is called contract rolling or rollover. That sounds like a technical detail, but it matters a lot. If rolling is not handled correctly, it can affect execution, spreads, liquidity, and even the accuracy of copied trades. In Darwin X0, this is managed through the assets page. That means strategy logic can be perfectly fine, but if the futures contract is not rolled correctly, differences can still appear between the CFD source account and the futures receiver account. The final question was whether copying from CFD to futures actually works well in practice. Based on the compared trading history, the answer is yes. Overall, it worked well. In the analyzed window, almost all relevant CFD trades were transferred to the futures account. The capture rate was high, execution was generally fast, and most copied trades kept the same economic direction as the source trade. There were a few isolated issues, including one missed trade, one clear DAX anomaly, and some smaller differences caused by execution timing or contract structure. But these do not look like major system-wide interference. The key conclusion is this: copying from CFD to futures proved to be viable, and in this sample, the futures side actually delivered a better percentage outcome than the original CFD side. So the core mechanism works, and the next step is not to change the concept, but to keep refining the technical details. If you'd like to explore more systems like this one, visit QUANTMONITOR and check our free trading strategies section. Registered users can download selected strategies for free at quantmonitor.net. Category: Free Trading Strategies. Thanks for watching, and I hope to see you on QUANTMONITOR.